Okay, welcome traders, welcome today to MarketWise Traders, and today I've got another awesome video as we are dealing with the fundamentals of trading, the foundational principles which will help you in the long run. And today, last video we looked at margin, and today we're going to be looking at a margin call and stop outs. I touched briefly on it last video. In this one I'll explain more clearly what it's all about. Okay, so as you should understand by now, if you haven't watched the previous video in this playlist, what margin is, we understand that margin is unused equity that is required to open and maintain a trade. The unused equity or money available, capital available in your account to open and maintain a trade. That means like to hold the position. You know, like if you've played sports, whether if you find there's a defensive line and you have to hold that line. So if your defense is breached, then you will get scored a goal or a try or a touchdown or something like that, isn't it? So your margin is sort of like your defensive line. What the broker is saying, okay, this is the line. If you go below this line, then that's it, your trade is going to be closed, right? So, for example, as we used last time, I'm using a micro lot, the smallest of Euro USD, where we're saying you'll be trading $1,000, which is basically 1,000 units of the currency. But at a leverage of 100, then you will only need $10 to open and maintain that position. You will need $10 free in your account to open and maintain that trade of one position. So, technically speaking, if the trade goes to $9.99 or $9.90, which is like about, I think there should be 1 pip against you, the broker is allowed to close your position. Not many of them do that, but they are allowed to at that point. So there you go. If you have $10 in your account and no other trades open, your margin level is at 100%. Okay. So like I explained, if the trade goes against you, your margin level goes down. So like in this above example, here we say more clearly that 1 pip, as I mentioned to you, is equivalent to about 10 US cents. So if your trade is at minus 20 pips, then that means you are at minus $2. That means that your margin, your equity is at $8 and your margin level is no longer at 100%, but it is now at 80%. So your broker said, for me to open this position for you, I want free $10 available to open it. So that is the agreement, which they will not clearly tell you when you sign up. They will tell you about bonuses and everything else, but they will not clearly tell you that if your margin level gets to this below the required amount, they can close your position. So if your trade is, like I said here, 20 pips down, your margin level is now at 80% and they can close your trade. So like I said, as soon as your margin level goes below what is the minimum required amount, your margin level goes below 100%, they can close your position. But now, most brokers, they will give you a margin call, but usually as soon as the margin call comes, soon after that your position will be closed. So a margin call is when they tell you, look, it's sort of a courtesy call. Some will actually phone you, most they'll send an SMS and an email to you to say, you have this position open, your account is in danger, please can you top up immediately, deposit to keep your defensive line held. And if you do not do that, that is when they do a stop out, and a stop out is basically where they close your position. And at times that stop out can, because money is deducted once there's a stop out, so what that can do is it can affect all your other trades which are open. Not many people know this. That's why someone will come and wonder to say, but I was in a winning trade, what happened, and my other positions have been closed. It's because you have not focused on your margin. You have not focused on your margin. You must know how much free margin you have got to not just get to your terminal and just start opening trades. This is what we teach when we teach trading here. After level 1, we teach you the basics, and from there we teach you how to manage your your equity. Okay, so this is some stuff we're just giving you for free here on level 1, and we share some tips as well in between. So always we're concerned about you. So most importantly, be sure not to just get to your terminal and your trade terminal and open many positions, because that is very dangerous to your margin. This is why we said it does not matter about the bonuses you are offered. It does not matter how much huge leverage you have been offered and able to open a position. What matters at the end of the day is your margin level. Leverage, this is where it will destroy you. This is why, like when we spoke on the leverage which institutional traders use, and hedge fund managers and big fund managers, they use a leverage of about 1:2 or 1:3, because they know they want their margin to be at a safe level, okay, to prevent closed positions. So this is it, traders. I'm sure this has helped you. If of all the videos which we have touched on foundational principles of trading, this, I say to you, you have to know and master. If you do not know this, because everything we've done, it comes up to this. Okay, so yeah, if your account it goes below that level, they can just blow your account. Like as we've said, a blown account where you just find your account is just empty. All right. So avoid that. And how do you avoid that? By making sure that when you place your trade, you trade responsibly, and you do not just open several positions due to your emotional excitement or whatever you may have been told, or because your broker has given you extra bonuses to enable you to open those many positions. They do that because they know that your margin is going to be in danger, right? So this is it on margin calls and stop outs. I'm sure this has been helpful to you. Share this with other traders, help them out. Remember to like and comment below, email us if you have any questions, and we can see if we can do a video which will help you on that subject. Contact us if you want to learn more on trading and that. Otherwise, stay subscribed, and we'll be posting some helpful tips each and every time. Thanks for watching.
Learn, then earn money online. You control your money. You control the risk and the reward. Start from as little as $10. Stop losing to get-rich-quick scams and pyramid schemes. Learn a legitimate skill of online trading. Already a trader? Stop donating to brokers. Become independent. Stop relying on signals and careless account managers. Learn to trade the market maker way. Take our course and follow the rules of big banks and smart money. Get wisdom. Get understanding. Get wealth. Contact MarketWise Traders today.